market conditions is that this is related to our real estate boom. How much of this is residential real estate? How much of this is infrastructure build? How does it break down?
Yeah, thanks for the question. We of course see, and we are lucky in the MENA region and especially in the UAE, with the very strong economic development. And we see indeed, as a steel and cement business, the strong development in both infrastructure as well as housing and also office buildings. It is, let's say, the housing is a very strong part, but the large infrastructure projects also contribute to it. What is important for us as a company, that we actively engage with the developers upfront, early time, to lock in those projects. And what we see is that the, let's say, order book for those projects is growing and growing. So we're very positive about our performance this year, and also positive about what we think is coming ahead.
Right. We can't talk about steel or pricing, input costs or demand without talking about tariffs at the moment, which didn't go away. In fact, they doubled. How has that affected you, whether we're talking input costs or whether we're talking global pricing?
Look, on the input cost, there is no impact for us. We are sourcing iron ore pellets, and that's not impacted by tariffs. On the, let's say, tariffs as they were imposed in the US and also developments we see in Europe, of course that has a certain impact. But we should acknowledge that the price levels for steel in the US are substantially higher than in the rest of the world. So even with a 50% tariff, we are able to serve our customers. We see, however, if we look at 2025, that we have a stronger share of local sales than international sales compared to the previous year. What is important for us is that we maintain our relationship with our customers overseas, maybe at a somewhat lower level than in the previous year, but we want to ensure going forward, when the environment will change again, that we have that relation ongoing.
It's not the only international move, though, that affects the steel business. We've also got Europe tightening carbon border rules. And I can see in your reports here that you've got an entire section dedicated to green steel, to sustainability. How much is that impacting what you make and how you make it? How are you, I guess, protecting yourself against more changes coming in regulation-wise?
Yeah, look, we have a long history on decarbonization. Within the steel industry, we are recognized as being really a front runner, a leader with respect to decarbonization. That will and does benefit us when, let's say, the European CBAM, the Carbon Border Adjustment Mechanism, comes into place. Because if you have a lower carbon footprint than your competitors, you're better positioned for imports. So we don't see that at all as a, let's say, threat. We more see that as an opportunity. And we benefit from that because we have invested it for the long term. And you will have seen that we have also invested and announced this year TrueGreen, specific identity, a brand, to demonstrate that our products, let's say, are on that road towards low carbon. We provide environmental product declarations, which by now a lot of end customers require to demonstrate that they work on their carbon footprint.
Super quickly then, one question on that. Are customers willing to pay a premium, if any, on that? How does it price?
I would say within the UAE, not so much yet, but they do recognize, and they prefer them to select you over others. In Europe, you will see the premium coming in, but it's not massive yet. But we are sure that going forward, this will be the differentiator, which will ensure that we are the preferred supplier for customers. I'm
going to sneak in two quick questions for the shareholders in the final minute I've got left. First off, how protected are you if our real estate boom slows down?
Now, you always need to take care of that, of course. So we're not getting overly excited by expanding capacity or something. So we are currently fully utilized at maximum production. And when, let's say, the boom or the market slows down again, and it is a cyclical industry, so it will happen at a certain moment of time, we think it's still quite far away, then we are well protected. We have a good relationship with our customers, and it's important to have good partnerships with both suppliers and customers through the cycle.
Second shareholder question, you've doubled your net cash. Should we expect that to translate to higher dividends, or are you holding firepower for M&A or expansion?
Our main objective is to utilize that cash for growth, so invest towards the future. But of course, we cannot decide on everything. Our shareholders also have a say on this.
Mark Tonkins is the Group CFO for EMSTEEL. Earnings out about an hour ago. Net profits up more than 200% year on year. Thank you for your time.
Thank you very much.
You're listening to The Business Breakfast.
News moves fast. Dubai Eye 103.